Now, 46 cents of every dollar S&P 500 companies make comes from overseas. But with Europe in trouble and China slowing down, companies and investors are looking for developing economies for new growth. We spoke with Mark Mobius, Executive Chairman of the Templeton Emerging Markets Group. Mark, thank you for being here with us tonight. How do you describe the state of the global economy today?
It's actually pretty good. I mean, I know a lot of people look at the headlines and they say, God, the world is coming to an end. But if you look at the leading indicators, whether it's the PMI index for China and the U.S., or it's the OECD index, you'll see those indices are still high. They're not where they were at the end of '08, beginning of '09. So in that sense, looking forward, we're in pretty good shape. Now, of course, if the so-called fiscal cliff is with us and we go over that, then, as you know, the Budget Bureau is predicting minus 4%.
A recession for the United States,
a real recession, unemployment going up and so forth and so on. But I think at the end of the day, compromises will be reached.
What about the emerging markets? We've seen some of the second markets begin to slow down or see the growth rates begin to taper off. Are you experiencing that really across the board?
Yeah, pretty much. With China coming down to maybe 6-7%. As you know, they were at double digits. India is still about 6%. And there are 4 or 5 countries that are well over 5%, but they would have been, if we hadn't had all these problems, they probably would have been much higher. Mm-hmm. But it's not like going to minus or at least even going to low single digits.
It's the deacceleration, though, that investors, longer-term investors, will point to as a worrisome trend. Do you agree with that?
Of course. We have to watch it very, very carefully. But at the end of the day, if you look at the average for emerging markets, the average growth rate is 5%. Mm-hmm. So that's 5 times more than what the developing markets are doing. So when people ask me, do you think we're going to have a hard or soft landing in China? I say they're not landing. They're going to continue flying because 5 or 6, 7% growth is very, very fast growth.
Are these economies developing themselves? So in other words, Mark, are they becoming less and less dependent on trade with the big economies like the United States and Europe and more internally developed?
That's really interesting because if you look at the numbers, the percent of their exports going to the EU and to the U.S. is going down. Over the last 10 years, you've seen a steady decline in the percent of their total exports. Mm-hmm. But the actual dollar amount is going up. So what's happening is that they're becoming less and less dependent upon the U.S. and Europe and trading more amongst themselves. And at the same time, world trade is expanding. And that goes for the EU and the U.S. They're exporting more and more.
Give us a name of an economy that you've got your eye on for long-term investors.
If we look at Thailand, I would say that would be one example of one of the smaller markets. Of course, the BRICS, the Brazil, Russia, India, China, mm-hmm. are still very much in our radar scope. But if you look at some of the medium and smaller size companies and countries, you'll see the companies in Thailand and Thailand as a country. Very interesting.
A lot of Western technology firms build, for instance, disk drives in Thailand. When Thai experienced some severe flooding last year, those Western companies got hit. What is attractive about Thailand for long-term investors?
It's mainly political to begin with. As you know, they went through a lot of political turmoil. You had the red shirts, the yellow shirts, fighting on the streets of Bangkok and so forth. But they have a fundamental foundation for political stability, which is very good. And also they have a very diversified economy.
We'll continue talking Asia with Mark Mobius tomorrow. China's Communist Party selects a new set of leaders this week. We'll talk about how this change in power could impact China's economic relationship with America and American investors.